Well, thanks so much for tuning into this earnings conversation with Havels, and Mr. Anil Rai Gupta is with us to talk about how he feels about the current demand scenario. Of course, also briefly talk about how the quarter was by. In the words of Jeffries, it was a strong beat to their estimates, sales and PAT growing by 76% and 270% YOY, with a sharp operating margin expansion to 13.6% and the growth being broad-based. Mr. Gupta, would you agree with this? Or save for the Lloyd's disappointment, which might have been industry pervasive, so to say, was there anything else that you think missed the mark for you?
Well, given the circumstances, I think we are quite satisfied with the performance. I mean, when I say given the circumstances, as we know, this particular quarter, this COVID wave was the most ferocious that we could have ever imagined. And the only difference from a business point of view was that it was not a complete lockdown as was last year. So that was a big difference this year, and hence the kind of revenue growth which would happen because some of the projects were open, some of the markets were open. So it was, but during this quarter as well, we are quite satisfied overall with the performance. Definitely, we lost both on the fans and the air conditioning season last year as well as this year. So that has been a dampener which kept the inventory levels high for these product categories in the system, which will get adjusted over a period of a few months. But generally speaking, yes, the summer products didn't get the right shares.
Yeah, so actually before I go with the good part, just wondering, the fact that Lloyd's did get impacted, and usually that season gone is under a normal year is a season gone. Do you anticipate, however, that much like what happened in 2020, that as the opening up happens, there could be some pent-up demand, or the pent-up demand was a factor of last year and this year it might not be the same?
It might not be the same as last year because last year the pent-up demand was also because of the reason, as I said, the markets were actually completely shut. This time it was a difference. The markets were open at least for a shorter period of time. The projects were continued to run, so there will be no pent-up demand. However, when the markets have opened up, generally speaking, we are seeing growth over last year. But I would not say that it's a pent-up thing. So the season lost for the summer products, we'll never be able to recover that in the coming months, and hopefully we should be looking at a better season in the coming times because there the pent-up demand for the summer products will actually show up.
Yeah, agreed. So just one small follow-up on that, Mr. Gupta, and then I want some questions on the electrical goods space as well. The point that there might be higher inventory in the system, not just from your end, I'm just saying from the industry perspective, that there might be higher inventory in the system, and the fact that raw material prices, even though have cooled off a little bit, haven't quite cooled off materially. Does that put pressure on your ability to price the products higher in order to be able to combat the margin pressures in that segment, which is the summer product segment?
Absolutely, you've hit the nail on the head. That is true. When the overall inventories are higher in the system, there is a bit of higher competitive intensity to pass it on to the market at a price which is lower than what it should be, and hence clear off the inventories. And this is just a industry trend, and that will continue for the summer products. And that's why if you see in the last quarter, the ECD margins and Lloyd margins were not in line with the other divisions. So there we have seen some contraction, and that's also because while the raw material prices went up, the ability to price the product in the market was lower.
Okay. Mr. Gupta, what about the other segments? Because as I read the reports from analysts who compare you with the others comparable size peers, you seem to have done better on almost all counts compared to all of your other quote-unquote competition. How satisfied, not satisfied are you with the non-summer products space and the entire space that you covered, so to say?
Well, I think the non-summer product space, we've been very satisfied. On the switchgear front, the cables and wires, the lighting. And I think it's not just the first quarter, it's a sort of a continuation of the last few quarters that we've been working on, product enhancement, distribution reach, opening new channels like the rural markets or the online channel. I think those are the reasons that we've been able to gain market shares in these categories over a longer period of time. So that has been satisfying. And yes, overall, I would say that it has been a good performance in the first quarter.
Should there not be a materially disruptive wave 3, Mr. Gupta? Are you hopeful of continued sequential traction as an overall entity for Lloyd's into quarter 2 and quarter 3 as we hit two blocks of, how do I say, a festive season, and what a lot of other companies are saying, which is a slightly longer Diwali this time around?
Yeah, I believe that, Lloyd, we've always maintained that was on the right track since the third quarter of 2019, ever since we got into our own production of air conditioners. It was on the right track. Unfortunately, it was hit by 2 consecutive seasons sale lost. So I think going forward in the second and third quarter, though these are smaller quarters for Lloyd as a whole because air conditioning being the mainstay product, but we will definitely hope to see growth in Lloyd overall, as compared to last year and last year.
Okay. And overall, Havells, would you believe continued traction? I know electrical goods may not necessarily benefit too much from Diwali, or maybe I'm mistaken. I'm just trying to understand, hitting those 2 festive season blocks, are you more optimistic about?
I think the way things have started opening up after June, obviously June was a little bit of a stop and start kind of a scenario where lockdowns were opening up but not fully. I think July we've seen, other than some southern markets, we've seen the markets open up, and there is growth that we are experiencing in the month of July. So even in let's say seasonal products like Diwali products, we are hoping to see growth in the second and third quarter as well.
Okay. Mr. Gupta, one final question. I'm just trying to ask you to wear the industry captain's hat, so to say. Something that's puzzled me when I look at the asset quality numbers from, say, a Bajaj Finance and an HDFC Bank, two companies which are regarded as the best risk insurers, so to say, or risk metrics, so to say. There is evidently some pressure on the Indian consumer and the Indian borrower. Do you think that could come to haunt as the quarters go by, or do you reckon that it could well have been idiosyncratic factors or factors around a disrupted quarter 1? Do you sense some issues around the consumer when you do your channel checks, etc.?
I think there is no doubt that this year the consumer has been far more affected as compared to the last year lockdowns. It probably affected some part of the community, but this time around, because of the health reasons, a lot of community has been affected. So this could impact the consumer sales. But I think it is 2 things. One, this year, the industrial infrastructure, the project segments have done better. And that continues because those kind of investments are happening both by the government and the private sector. The other thing is, I believe companies which are stronger in product innovation, distribution, they've been able to gain market shares in the last few quarters. And we've definitely seen market share gains. Hopefully, if there is any lack of consumer sentiment, that should overcome that, both the industrial demand as well as market share gains. So I believe, we are definitely looking at the next few quarters as quite hopefully and optimistically.
Can I wrap up with something, Mr. Gupta? You run a very large company, so multiple products, but I'm just trying to think if there is anything that you are particularly excited about in terms of an innovative measure that you would have undertaken within various categories, something that you're looking forward to.
I'm excited about so many innovations happening in Havells, so I can't pinpoint on one.
Okay, fair call. Mr. Gupta, appreciate you taking the time out. All the best for the quarters ahead, and thanks so much for being with us.
Thank you so much. Thank you.
And viewers, thanks for tuning into this conversation.